You ever thought about business as a language? Really think about it. Every single company tells a story with its numbers, a story about its wins, its losses, its future. But what happens when companies from, say, India and Germany try to talk to each other? Well, if they're using different financial languages, it's just noise. That's exactly what we're going to dive into. How India made the huge decision to learn a global business language, transforming its financial reporting from a local dialect into a globally understood tongue.
You know, for any language to work, you've got to have rules, right? A grammar. Well, in the world of finance, that grammar is called accounting standards. These are the rules of the road that make sure everyone is telling their financial story in a way that's clear, consistent, and, this is the big one, trustworthy. And let me be clear, these are not just some gentle suggestions. Nope, think of them as the official rulebook. They tell companies exactly how to record and report every single transaction. Without them, trying to compare two companies would be totally impossible. It's like comparing apples and, I don't know, spaceships. Investors couldn't make smart decisions. So yeah, these standards are the absolute bedrock of financial reliability.
So who's writing this rulebook in India? Well, for the longest time, the main author has been the Institute of Chartered Accountants of India. You'll know them as the ICAI. They've been the ones setting the standards, really shaping the whole financial reporting scene in the country since way back in 1977.
For decades, India was kind of playing by its own set of rules. This was the era of what everyone just called accounting standards, or AS for short. This was the original, homegrown playbook for Indian business. And you know what? For a long time, these standards worked great. They were tailor-made for the Indian economy at the time, which was a lot more focused on itself, domestically. It was the perfect language for an internal conversation. But then, the world started to shrink. India's economy exploded onto the global stage, and suddenly, its unique financial language started to feel more like a barrier than a benefit. The old rulebook just wasn't built for this fast-paced, interconnected new world.
And right here you can see where the cracks really started to show. The old AS system, it just couldn't keep up with modern finance. Take something like derivatives, these super complex financial contracts. The old rules barely mention them. Imagine trying to figure out a company's real risk if all that stuff wasn't being reported clearly. Plus, guidance for huge corporate moves like mergers was thin, and global investors were demanding way more transparency than the old disclosure rules required. The language was just becoming obsolete.
The thing is, India wasn't the only one facing this. A huge global movement was already building to create one single set of standards for everybody. It kicked off back in '73, got serious in 2000 with the ISAB, but the real game changer, the tipping point, was 2005. That's when the entire European Union made these new standards, IFRS they're called, mandatory. All of a sudden, speaking this new global language wasn't a choice anymore. It was a necessity.
So what did India do? Did it just stick its head in the sand? Nope. It answered the call. India decided to forge a new standard, a new dialect, you could say, that was built to talk to the rest of the world. And this was the birth of what we now know as Ind AS. Okay, so India had a really big choice to make here. Path 1, adoption. Just take the global IFRS rules, copy-paste, and you're done. That's what Canada did. Path 2, convergence. This is more nuanced. You take the global rules as your foundation, but you tweak them, you customize them to fit your own country's laws and economic reality. And India chose convergence. A perfect example is property and equipment. Instead of forcing every company to do a super expensive revaluation of all their assets, Ind AS allowed them to use their existing values as a starting point. It was a smart, practical solution for a local problem. That's convergence in a nutshell.
And let me tell you, this was not a simple copy-paste job. Not at all. Creating each new Ind AS is this whole rigorous process. First, the global board issues the main standard. Then the ICAI drafts the Indian version. The NFRA, a regulatory body, gives it a thorough review, and finally the Ministry of Corporate Affairs makes it official law. It's a journey with a lot of checks and balances.
So, the new rulebook is written. Now comes the hard part, getting the entire Indian corporate world to actually use it. Think about that challenge for a second. This couldn't be an overnight switch. It had to be a carefully planned, massive rollout, phase by phase, across the whole economy.
And just look at the sheer scope of this thing. We're not just talking about the big, flashy companies on the stock exchange. The plan covered huge, unlisted companies, those critical non-banking financial companies, and the absolute giants of the banking and insurance worlds. This wasn't just a tweak, it was a fundamental rewiring of the entire Indian economy.
So, after all that incredible effort, was it worth it? Why does learning this new financial language actually matter so much?
Well, the benefits are huge, not just for one company here or there, but for India's entire economic reputation on the world stage.
And the payoff was definitely worth it. By speaking the same financial language, an Indian software company could now be directly compared, line by line, with a competitor in Silicon Valley. That kind of clarity builds massive investor confidence. And when investors are confident, what happens? Capital flows in. It just became way easier to attract foreign investment. But at the end of the day, it just meant better, clearer, more honest financial reporting for everyone.
You know, this quote from the source material really just nails it. Financial statements are, first and foremost, a tool for communication. That's their job. By lining up with global standards, India made sure that the stories its companies were telling could be understood, trusted, and acted on by anyone, anywhere in the world.
Which leaves us with this one last, big, fascinating question to think about. We've seen this incredible move towards one common language. As our world gets even more connected, even more intertwined, are we heading towards a future where every single business, from Mumbai to Mexico City to Milan, reports its finances using one universal set of rules? What would that even look like? It's something to think about.